Good morning, everyone, and welcome to this Monday, June the 22nd edition of Frontier Opening Bell. I am Bosun Omofaye, and let me welcome my panelists for a brand new week. Uchenna Minis, the managing partner and FX trader at Blue FX Nigeria, is joining us from Lagos here. Good morning, Uche. Hope you had a great weekend.
Good morning. Thank you, boss, and I did.
We appreciate that having you here. And Ali Khan Sacho is of a Rich Frontiers Management in the city of Nairobi, East Africa, Kenya. Thank you so much, Ali.
Thank you for having me, boss.
Good morning. And also joining us on the show today from Lagos here is Luke Ofojebe, who is the head of equity research at Vetiva Capital. Good morning, Luke. Hope you had a great weekend as well.
Yeah, good morning, boss, and I did. Thanks for having me today.
Thank you very much. So let's hit the ground running. Let's quickly go through the continent's equities indices for the week we just finished. We do this for you on a daily basis. Five of the other markets we have. Nigerian market was about 1% in negative territory, some profit taking below the 25,000 in last week. The Ivorian market was in the opposite direction within the West Africa space. The second, one of the third major exchanges within the region, 0.4% in the green. The Egyptian market went in the negative direction in North Africa, almost the same margin as the West African BRVM. Meantime, the Kenyan market, that's the Nairobi Securities Exchange, was 0.23% in negative territory, while the South African GSA was positive by just 0.5%. Okay, let's start as usual with the East African markets, shall we bring that on? Standard Chartered of Kenya says it's revising its 2019 final dividend from 15 shillings to about half of that. Meantime, ABSA, also in Kenya, gets about 2.6 billion shillings loan from its parent company to boost its liquidity and the bank's capital. A bit of a pressure there. Ali will have a few words on that for us. CIC Insurance is postponing its annual general meeting to third quarter this year. Meantime, Fitch over the weekend revised Kenya's credit outlook to negative. That's some of the story from East Africa. Zimbabwe is a different story within the Southern African space. So let's get Ali to weigh in very quickly for us. First, with the revision of outlook on Kenya's sovereign from stable to negative.
So thank you, boss, on that Fitch rating. Basically, long-term foreign currency issuer default rating goes to negative from stable. Quite an in-depth report. Let me just touch on key points. Revision of Kenya's GDP to 1% for this year. I still think that's going to be optimistic. I expect a contraction. Talking of a 30% fall in Kenya's agribusiness exports, including horticulture, tea and coffee, that accounted for 3% of GDP growth in 2019. And basically talking about our fiscal and public finances being a rating weakness. They are skeptical about the government's targets on the deficit. And they're saying the widening of fiscal deficits will increase the sovereign's external financing needs, which along with the fall in travel receipts and remittance flows will worsen Kenya's external balances. So very bearish, actually, in my view. Quite concerning that talking about the hit to horticulture being bigger than the locust problem. You know, we got these locust invasion and this very biblical type situation we find ourselves in with the plague and locusts. You know, you think it's out of something out of the Bible, but essentially, I think the Kenyan government, like yourselves, is going to rely on the local markets to tap liquidity to fund the deficit, and it's going to be difficult for now to issue into the international Eurobond markets. Quickly.
Okay, so Ali, how does this Fitch rating, how does it flow into the financial markets and the financial system when you have a credit rating of this nature, downsides to negative? So who feels it? The banks?
So firstly, they're downgrading hard currency debt. So that's the Eurobond, dollar-denominated Eurobonds that we've issued since 2014. But you've got a big macro wave happening here, right? Which is all about appetite for frontier emerging market debt. And for now, that's overriding a ratings movement such as we've seen here. But I think so for now, the bond levels are around 8.5% in dollars, which is far better than it was when it was double digits, I think in March when we had the big sell-off. So it affects international bondholders, but for now they're looking through this type of ratings movement, and it's more a story of the international appetite for risk. So I think important statement, very interesting granularity in that statement. Most sensible analysis I've seen for a long time out of ratings agencies and even our own government, who are very, very optimistic and bright-eyed and bushy-tailed. Just to touch on two other things, Stanchart, as you announced, had previously announced a 15 shilling dividend, decided to halve it and give a 1 for 10 bonus. ABSA, speaking to the stress on bank balance sheets, the restructuring that's going on, drawing down $25 million, quite substantial. And I think, and then CIC postponing the AGM, which is a feature or a bug of the market at the moment because of COVID-19. But I think the main issue for me was Fitch. And we're going to see this trend across the continent because I still think we're way too optimistic about growth and what's going to happen next.
Okay, interesting. Thank you so much for raising the curtain, Ali. Quite a broad view of the Eastern markets. Again, Kenya, a major destination there and the biggest economy. But again, just a quick look into some headlines from the West African and Nigerian markets. After that, I'll get Uche to speak a little bit to where we are in the global space. We got a report late last week from Quadros Capital, one of the investment banks, about the economic review of Nigeria. We plan to speak with one of the analysts there in the course of the week. Meantime, Nigeria's debt management office says the country's borrowings from China stands at $3.121 billion US dollars at the end of March. There's big discussion this week around Africa's debt to freeze, forgive, or forget. Meantime, one of the listed companies in Nigeria, Japol Maritime Services, in the oil services industry, says its annual shareholders meeting will be later next month, and the company is raising to raise its share capital to 60 billion local currency, and of course, that will bring its market cap to about 27 billion naira. This is for the analysts to chew. In Ghana, the GSE expelled Liberty Securities as First Atlantic for violating market rules. Last week, folks, I remember we spoke about the problem within the Ghana market when it comes to the investments and securities market, all the offerings that are on the street, what the SEC is doing to try and clean up the market. Total claims, according to some reports in Ghana, about 2.1 billion US dollars. That's about 17 billion Ghanaian cedis. So quite a big story there. We're following that as well. Meantime, in Cote d'Ivoire, on BRVM, Sudeshi is declaring a 2.952 billion gross dividend in CFA for the year 2019. Some of the corporate news we try to squeeze into our daily conversations here. So let me just let's get a minute from Uchenna. This morning, the futures markets are looking soft, but the metals look, the commodities market look very good. Oil is above 40, so I'm sure some folks in Abuja, Nigeria, and in Angola will be smiling, at least having a bit of some hours of sleep, hoping that oil prices remain at this level for some time to come, at least for the rest of the year.
Towards the end of last week, we had the quarterly news whereby Apple had to shut down some of their stores, highlighting a spike in COVID-19 cases, and that in itself just saw the market sell off up until early hours of this morning, but we are seeing some sort of sentiment relief, really, and we are seeing the metals, the commodities space sort of appreciating in value. This has come out of investors sort of price in risk will determine generally where the market will go. And right now, as I said earlier in our previous sessions, we're getting to the place where the COVID-19 is sort of not looking like has come to stay. We need to now learn how to live with it. It's not a thing. We don't have a near-term solution. It's something that would, until a vaccine comes out, an effective treatment. So when investors is trying to sort of shrugging such risks to the side, I think now we now need to sort of start analyzing should I say asset classes as to which and what will provide the most viable yield compared to others, really.
Okay, interesting, Uchenna. It's a very interesting week. I'm sure there are a number of considerations for the market. We're stepping into the final week of the month of June, and folks will be looking back at the year so far and say, oh, there's a whole lot of head scratching since January. So time for stock taking this week till the end of the month. I'm sure that will be on the minds of everyone, with everyone trying to have an outlook on the other half of the year, if there's any silver lining for the markets and for investors. So give us a minute of Nigeria's week preview, and what's on your table for this week. What's the playbook for you at Vetiver Capital this week across the marketplace? Luke from Vetiver Capital.
Okay, thank you, Boatin. This week, last week, let me just start with last week. Last week, we saw more profit-taking activities across major counters, and that was why the NSE Ocean index actually closed down. This week, we expect to see like a rebound in the market, especially in the heavy counters, the likes of GT, Zenith Bank, First Bank, as well as some industrial goods stocks as well. Then for the consumer goods, we see cherry picking happening in that space, especially the likes of Nestle and Nigerian breweries, which have been going up for some time. So overall this week, we expect the market to close up. And one of the major drivers for this week's sentiment will be the improvement in oil prices. At the moment, Brent price is above $40, so that's definitely going to support trading sentiment in the equity space. So overall this week, we expect the market to close up.
So when we talk about what is the play of FX here in this conversation, Ali, I'm sure you touched on that a little bit earlier when you talk about the future revision of Kenya's credits into negative outlook. So what's the play of currency here for you this week for Nigeria, for Kenya, which is a non-oil export economy?
So, look, Nigeria is highly correlated to the oil price. I mean, I saw a report before I came on here that the amount of oil in storage is about 2.3 billion barrels. This is a record all-time high. If you converted it into diesel, apparently, according to the article, you could drive every truck in the world 5 times around the world. So the point I'm making here is, to me, the oil price is now looking very toppy. It's not going to be sustained by fundamentals. It's rebounded, and now if I were Nigeria or Angola, frankly, I would be looking to hedge out the rest of my production for the year. So we might go up another $3, another $4, I don't know. But to me, there's an asymmetric downside risk. So from an FX perspective, I would be looking to be short or have some optionality with the big oil-producing FX currencies. With respect to things like the Rand, I think if I look at something like COVID, we're now hitting record daily cases. I don't even believe that number's accurate. I think it's an undercount. And it looks to me like we're at a spillover moment and a moment of acceleration. Mathematically, it hasn't gone exponential, but it's getting close to that point. What does that tell me? That tells me the time the easy money was made on this fantastic rebound. There might be some more, but I think, it's like being at the casino. You've made good money. It's time to pick up your chips and move on. But of course, not everybody does that. Where's the rand going? Rand's going weaker in my view. Where's the shilling going? Shilling is, it looks to me, another sell. Low interest rate structure now. Notwithstanding the oil price, I would be a seller. Where would I look at on a more bullish perspective? Obviously, somewhere like the Botswana, Pula, very, very stable economy. Or I would look maybe at Egypt right now, around 16, 18 to the dollar. It's sold off a little bit, but those guys understand how to keep foreign investors happy intuitively, as opposed to some other folks who've got them trapped in the market, a little bit like yourself.
So let's just, Ali, let's just squeeze in the Southern African markets into this conversation where you are now. So we just tighten that up a little bit with the Standard Bank in South Africa, putting additional share listings on the market. RMB bundles its shares in FirstRand. I think that's a story that started a couple of weeks ago. Meantime, the Reserve Bank in South Africa says its repo rate at an all-time low of 3.75%. Meantime, Zambia still hasn't gotten out of the conundrum of its mining industry. Says revenue down 30% in 3 months to April. So if you look at Zambia for us for a minute, Ali, how much stress do you think the country's mining industry is putting the currency, the economy for this Southern African state?
So talking about Zambia, this has been a slow motion train wreck that's been playing for the last 24 or even 36 months. FX reserves, less than $1 billion. They don't even know what their total debt profile is because they've allowed line ministries to borrow money and they don't have a total handle on that. IMF not coming in, whether it's because they've got an election coming up. President Lungu doesn't want to go under the straitjacket of the IMF. So you're now compounding the problem. So it is a second worst performing currency, I think, the Zambian kwacha in the world. So, you're looking at a kind of perfect storm. On top of that now, you're getting a 30% downdraft in receipts from the mining industry. I mean, it's like watching somebody dancing at a precipice and you don't know what's going to happen next. So at the moment, I think Zambia is probably the highest beta country in sub-Saharan Africa. If you think they're going to get real and try and stabilize it, then maybe it's time to step in because you're going to get a huge potential rebound. But until now, we haven't had an impression that either President Lungu understands the scale of the problem or shows the willingness to deal with it. So I'm very bearish on Zambia. I think, that the situation there gets worse before it gets better. And finally, just to touch on Standard Bank, which you were talking about, it's interesting that they're raising equity capital, given the share price has not been strong. So I found that quite interesting. But obviously, they're looking to fill their coffers and maybe take this opportunity to be more aggressive because it is a tremendous sub-Saharan African franchise, as you know, in Lagos and as we know in Nairobi.
Great. Okay, so what are you bullish on, Uche, now? When you look at the currency plays, the global, the majors, as it were, the dollar, the rand, the dollar, the pound, the euro, and the yen?
Right. So I'm bullish the US dollar, and I've always been reiterating that there is that significant growth differential, the US and the rest of the world. I still believe that given what this growth differential, we're still going to get net inflow into the US economy, basically on the basis of that. Generally, I'll look to short currencies that sort of have high proximity to, should I say, China, and also commodity linked. I'll look to short the Australian dollar. I'll also look to short the New Zealand dollar, and also the Canadian dollars in that respect. I can have the Japanese yen into the mix as a sort of safe haven, should I say, currency to sort of mitigate my risk and hedge my long positions. But very importantly, I just need to mention and refer to what I mentioned earlier, sort of corroborating with Alice's point. Investor sentiment sort of really basically drives the market, but most often time they are wrong. They are wrong because they have a crowd mentality, they have this herd mentality, and they basically just follow price, basically, without really trying to see the underlying fundamentals. So yes, this was exactly what we are seeing now is exactly what played around somewhat in mid-February, early February. Market started to sell off. It was more like it was rushed to the floor, race to the floor. So if investors always go into the market participants go into the market just discounting risk that can materialize to be significant, then it's a big deal.
Yeah, look, there's a fire in the room. Everybody's trying to find exit, and there's only one exit. So you have a crowded exit. Look at Nigeria, for example. The FPIs are queuing up. There is a dollar shortage. There's a pressure on the naira, 390 against the USD. Then you find the central bank trying to calm all the nerves. The market is trying to price in some depreciation down the line. So there's a problem here that is very difficult to fix because except the Federal Reserve, I'm not sure anyone has the machine to print the US dollar as we speak. So, but again, that's a conversation moving forward. Luke, what are you bullish on for this current week?
So this week, I expect the market to close up. So my view is mainly driven by my expectation for the industrial goods sector. That's BUA Cement to be specific. I still expect investors to pick that stock this week. So I expect it to actually support the market. More so, I expect investors to show renewed interest in MTN as well. I expect cherry picking in that space. And then for the oil and gas sector, I still expect a sort of mixed trading. I think investors might not really be willing to pick surplus right now, given the fact that oil prices are in a very low environment at the moment. So investors might still decide to sell surplus down this week. Then for the consumer goods, I expect bullish trading. I expect investors to actually pick stocks like Nigerian Breweries, Nestle, given that these stocks are still trading at very cheap valuations. So overall, I expect the market to close up. And like I mentioned earlier, the improvements we are seeing in the oil market is also likely going to support trading sentiment in the equity space. So overall, I expect the market to close up.
Okay, great. Thank you so much. Let's squeeze in. We have about a minute or so to wrap up the show. Let's squeeze in the North African market very quickly. What's some of the big stories that we saw in the week we just finished? Some of the markets within that region were finishing off in the they were a bit mixed in the week we just saw. The EGX, that's the Egyptian market, Pashi posts 4.14 million Egyptian pounds net loss for 9 months to March. These are some of the corporate news coming through with the impact of COVID-19 in Tunisia. The economic growth reportedly declined 1.7% year on year in Q1. Meantime, Sonatrach and Algeria concluding a gas contract sale with Tunisia. That's some of the news within the North African marketplace. But if you look in the broader other Frontier Africa reports, African Development Bank Group, that's the AFDB, retained his AAA rating from S&P, from Standard & Poor's. That's some of the stories that we have for everyone this week. So let's just leave it at this point for today, guys. Thank you very much, everyone, for being part of the show. Ali Kansachu from Nairobi, Kenya. Luke Ofojebe from Vertiva Capital here in Nigeria, and Uchi Naminis from Blue FX Nigeria. Thank you, everyone. See you again tomorrow, Tuesday, bright and early as always. We look forward to having you around the table once again. Thank you, everyone, and see you then.